Welcome back, chumps, to the Small Count Trading Challenge. I'm your host, the Chump Change Trader. And so I'll just get to the point because YouTube likes to limit new channels to 15 minutes. So this will be as short and sweet as possible. Sorry I didn't upload a video yesterday. I literally spent my entire evening getting a 285 millimeter wide low profile run flat tire onto my Corvette for race season. And it was not fun. Let's just say I'm a better trader than I am a mechanic. But everything's sort of sound right now, and then I'm able to sort of, get back into the swing of things. Plus, my allergies are killing me. But without further ado, let's jump right into the market recap. So here we have the NASDAQ, or the QQQ. And we just want to mention that this is March 23rd, 2023. So what happened in the last 2 days? Well, technically, 2 days. On Wednesday, J Powell announced a 25 basis point rate hike. And 25 basis point is 0.25%. If you didn't know what a basis point meant, it's just moving a decimal place into there. And simultaneously, Janet Yellen stated that in a statement to Congress that she was not necessarily going to 100% be dead set on helping the failing regional banks. So that was the biggest pause. So whereas J Powell was sort of like news that about 85% of like the entire predictions were going to be sort of digesting and front running a 25 basis rate hike. That's pretty much sort of what took the wind out of the sails. So you can see that in the March 22nd market opening, everything's just quiet until J Powell then enters, speaks, and there's a rally. Why? Because everyone just sort of was not blindsided by J Powell. And then Janet Yellen spoke, and unfortunately, we closed the day much, much lower. In terms of what happened today, a bit of a mixed bag. It basically rallied, at the beginning of the day, and then midday just took a big nosedive. I didn't really look into sort of what was the catalyst for that particular day, but you can just assume that it kind of remained flat to the average of where we were prior to any of these announcements. So let's just jump right into the trades that we had. So I did make a different move on the SOXX just like we have before. So if you remember, we have an iron condor originally set up right here. And as you can see, where the current stock price is moving towards the upper end of that particular profit margin, right? So, with a little bit of management trying to say, okay, well, if the market, and this was pretty much on, believe yesterday is when I put this trade in. And so when I looked at it, I said, okay, we might need a little bit of upside protection. So if the market moves to the upside, I don't want to ever incur a potential, $226 loss. As you can see from the P&L right here, it's $226 right here. And then this is the actual stock price that would occur if the actual position were to expire in 29 days in this price range. So what did I do? I decided to add what's called a short vertical position alongside it. So I did a short vertical of a short on a 420 put, and then a long on a 415 put, which allows me to have a max profit at expiration at anywhere between 420, let's just say 420 or 421, all the way through the upper bounds of the actual stock price. So this effectively gives me the possibility of getting a maximum of $123 in terms of upside protection. Obviously, if it went more south to lower than 420, then there's some big more losses incurred to it. And by itself, it doesn't really look like a fancy kind of trade, but again, with the limitations of a small trading account, I wanted to capture a additional profit and some protection while being able to minimize the amount of buying power that I was using. So in it by itself, it doesn't sound very promising, right? It's like, $123 for like 4x the downside. Well, if you combine sort of the market kind of strength that we were seeing, I didn't want to risk that in terms of letting the iron condor get run away. So by adding it with the iron condor, if you look at the whole position together, those two things spliced together, it basically lowers my actual loss on the upside if the stock price just magically decided to just run away and, explode. And for some reason, we have this huge boom in the economy, which I doubt considering the given market conditions. But simultaneously, it lowers that maximum profit loss at 138. So going from $268 to 138 for an additional upside to my profit margin, now we're sitting at 361. So basically, I fatten my profit curve when I am profitable. Simultaneously, I also decreased the range in which this is now less profitable, right? So now it has to push at 533 as opposed to the iron condor by itself. It was like basically, it's still the same, just a little bit more. We're looking at like 450, sorry, 530. 450 and then 453, but together, I stack a nice mean 361 profit for the whole position for the same buying power that I would have had for, so that's $700-ish of buying power that I used up for this total position. So, little less than half of the buying power for the potential of, about little more than 15% of the account value in 29 days left to go. So not too shabby in terms of management, at least the way that I perceive it. If there's any other kind of strategies that you would have layered onto that, because most of the times iron condors are pretty static, and there's no emergency maneuvers that I would employ in this situation as of yet. But there are ways in which we can get out of the position. And so I just wanted to just make sure that we were in sort of a gravy situation in order for me to know that I don't have to take the position off, but I can sort of add on to it to just kind of give me some extra protection, maybe a little bit extra money, yet simultaneously kind of move with the market trend. Because with the market trend of SOXX, we're looking at, from a 1 month perspective, still on an upward trend. We are not creating any newer lows as of yet from a 1 month perspective. So I just want to make sure that I can buy myself some time, squeeze out, and give myself some extra protection just in case. But at the end of the day, just because the technicals say that there are going to be, a movement to the upside, it does not mean that that's the end all be all. It does not mean that this particular trend is going to continue indefinitely. And so as long as, the fundamentals, which is pretty much the news catalyst, is going to be at the forefront, that's what's going to dictate the market, especially in these volatile times. So without further ado, if you have any questions, please leave in a comment below, like and subscribe, and I'll catch you in the next one.